Hi, my name's Cory Mayo, licensed realtor with Monument Sotheby's, and welcome to Who's in the House, your podcast for everything coastal Delaware. Make sure you hit that subscribe button, that notification bell. That way you're updated every time I upload new podcasts or videos. And if at any time you have questions, feel free to email us at info@who'sinthehouse.de as in Delaware.com. You can also call or text 302-466-5511. Now sit back and enjoy this episode of Who's in the House. Hey guys, it's Cory. This is Who's in the House. Today we have with us Steve Menozzi from New American Funding.
Yeah.
So happy to have you on. We're going to go over, just kind of chit-chat and talk about financing and real estate and Sussex County because you are...
Well, that's all the boring stuff, man. Let's talk about Lewis and growing up in Lewis. I'm happy to be back, man.
Yeah, you're a Sussex County boy.
Oh, I'm a Lewis guy. I mean, I grew up 4 blocks from here, man, on Jefferson Avenue.
Yeah, and fishing in the...
Fishing in the canal, man. Yeah, growing up.
So... until when? When did you make the transition out?
Yeah, so I went to the University of Delaware and came back for 2 summers, did some lifeguarding, hung out with all my friends. You know how that is.
Like beach lifeguarding?
Yeah.
Okay, so like legit, like...
Oh, well, I don't know. I don't know how legit it is. I've never saved anyone. But yeah, and then just went back and stayed up at the University of Delaware after like 1990-ish.
Oh, cool.
Yeah, so I've never moved back here.
As you know, it's a small town. It was even smaller when you were here.
A lot.
I can only imagine.
A lot smaller.
Maybe not dirt roads, but close.
Well, actually, we did have a dirt road, man.
Did you really?
Yeah. So at the end of my street on Jefferson Avenue, right? So those dirt roads used to run parallel with the railroad tracks, and you used to be able to go from Jefferson to Washington or Jefferson to Madison.
Yeah.
And those were dirt roads, man. That's how you did it, man. And yeah, so no, there were dirt roads, and so that's just the way it was, man.
Well, that's how you know that you're a true Lewis boy.
That's back, man. That's back right there, man.
But you're what, like 32, 30?
Yeah, 39.999.
So I mean, and I think that's important to part of this conversation also. We have Lending Tree or all these online services that they obviously make advertising statements and whatever. But I think that maybe if you're just in the middle of a regular town and maybe they can use on their online data to get accurate, but down here it's a little bit different. We have pockets, and with those pockets can come very big price increases. So like having a lender that understands this market is I think is important, whether you're on the new construction side or resale side, especially the resale side. I had a listing. It was someone that was with a big box brand, and it was right here on Lewis Beach, and it was turning into a disaster. And I said, I told them in the middle, I'm like, you have to stop, and we have to go with someone local. And it was like that. Instantly, it was back to normal, and we were good.
Yeah,
so it wasn't going to work out.
You're right, and no matter who you use locally, I think the local aspect of lending is obviously a lot more advantageous. For example, you go over the bridge here in Lewis, and most people don't know that's leased land.
Yeah. Yep.
Right, and so the lease is actually your property taxes, and so years ago you'd have to go to Alice at City Hall and get a letter from Alice that says, the mortgage company will be notified if there's any default on the lease because that is their taxes. So, and because it's a 100-year lease and it expands beyond a 30-year term, it's okay.
Gotcha.
But if you don't have someone that's local that doesn't know that's leased land because it's only that portion of Lewis, then you could get jammed up a little bit.
That's exactly, so right down there. That's exactly where it was, right on Cedar. It was on
Cedar Avenue, going down towards the inlet, man.
Yep. And
did all my fishing there.
It was a shame because they were getting upset, and all of a sudden we were in this big emotional scenario, and it's like here's the biggest thing: they thought they were saving because big brand, and they're marketing or advertising these crazy low rates and everything.
Yeah.
And when they went over to someone that knows the area, all of a sudden, and there really wasn't that much of a savings that they thought they were. But that's that's why they did advertising and marketing. That's the whole job.
Well, it works. Marketing works, and that's the way it goes.
Yeah. But I think there's also a difference between having a big brand that has a 1-800 call-in number and having a big brand that then has more independent people like you that are kind of the face of the brand here.
Correct.
So maybe give a little bit, give us some background history on New American Funding and kind of, where they are in the marketplace and size and all of that.
Yeah, New American Funding is actually a little bit newer to the East Coast. They're a California-based company. I joined them late last year, and they're absolutely dynamic. And it's the largest single-owned, privately owned mortgage company in the country. They're owned by a married couple. The husband was a software guy. The wife was a mortgage person. They married, and they started a software company and then sold that and then started a mortgage company 25 years ago.
Okay.
So they've only been east of the Mississippi for about 5 years.
Oh, okay.
But the most important thing there is that getting back to our previous conversation before we came on the show was they own their own portfolio. Okay. So from a servicing perspective, when you get your mortgage statement every month, you get those letters that say, oh, your mortgage has been sold to Mr. Cooper or your mortgage has been sold to someone else. And I get these calls all the time at previous companies. Steve, how do I make my payment? Who do I make my payment to?
Yep.
And is it going to get there on time? Don't want to be late, right? Reasonable. So since we own our own servicing portfolio, 98% of the mortgage statements for the life of the customer come from New American Funding.
Okay.
Which is huge because then there's no anxiety over all of that.
Yeah. It's funny that you say that because, when you first told me that, I'm like, is it really that big of a deal? Because, they get bought and sold all the time. But when my mortgage got, here I am speaking on both sides of my mouth. When mine got sold, I went into like full panic. And I think that a lot of it also has to do with like the scamming that's going on. Like there's always a letter and always someone that's calling and saying, the IRS is going to arrest you or whatever. So I get this letter and all of a sudden, and I try to, here's your login credentials, put in your whatever. And so I call, the bank that's currently holding my mortgage and they're like, they didn't know. So I'm in like full freak out mode. So then I called them back the next day and all of a sudden, I guess things hadn't quite gotten to them. And then they're like, oh yes, no, that is okay. You should do that.
Yep.
But it was panic. It was a panic mode. I mean, this is our livelihood. This is our house. And, if someone hacks it and they take our money, I can't pay for my mortgage now. So it's funny. At first I didn't get it until you brought that up. And I'm like, that happened to me.
And when I go to settlement and we're sitting at the settlement table, and I give our clients a nice gift and thank them for the business and the opportunity. And I say, listen, and this is what I always say to every single client prior to working at New American. I'm like, listen, you're going to get a lot of junk mail. You're going to get bought and sold mail. You're going to get scams. What I need you to do is take a picture of it and send it to me. And I'll verify whether it's legitimate or not.
Yeah.
And you would be amazed at some of the stuff that comes through the mail where they would take someone's logo and make it look legit.
Sure.
And so, you have to kind of be mindful of that. But here at New American, with our servicing portfolio of $70 billion, that doesn't happen.
Yeah. Well, and I think that's actually really cool, too. I think that a lot of people assume that once they leave that closing table, kind of their relationship with their lender is kind of over. Not terminated, but like, you don't need me anymore. I don't need you anymore. We now have our mortgage. I'll make my payment every month, and it kind of goes on. And you don't think that this is like an ongoing relationship to where it's like, hey, and maybe not all lenders act that way, but it's nice to hear that you do. I'm here. Should you have a question, reach out. I'm a person in the face. Whereas, and I think that is, to my point earlier, that the 1-800 numbers that you call, I mean, you may call, you have no idea who even answers the phone.
Yeah, I mean, they could have been in a different industry 60 days ago.
That's
right?
true. That's true too. Yeah.
So that's the thing. You don't know who's on the other end of the line.
Yeah.
And so when we have our relationships as a mortgage professional and a real estate professional, and we pass our referrals back and forth, there's some trust, obviously, in that relationship. And when you put your name next to my name and you're passing it to someone else, there's an expectation too, right?
Sure.
So that whole relationship-based model is what we were talking about previously. That's where it really works, right? My clients know that they can call me from 8 a.m. to 8 p.m. 7 days a week.
Yeah.
Yeah, I wouldn't try getting someone on the weekends at some of the larger online lenders, because I don't know if that's a possibility or not. I don't call them, but
I've dealt with it on this side, and especially, I mean, I had one house. It was a little bit more up north, and they were dealing with them because, again, they thought they were going to get a great deal. They'd refied with them before, and they're like, "Oh, it was a great experience," which I think that's a completely different scenario.
Well, that's an easy thing to do.
So but this was a harder one, and it was a VA, and it was a debacle, and we literally were down to I don't even want to say the 9th hour. It was 9th hour and 59 minutes.
Right.
And I mean, and there were times that we needed things done. They weren't answering their phone because it was 5:01 and the phones were turned off or something. I don't know. So, but I think that's huge. And I think and the nice thing that I really, from a personal standpoint, that I like working with you on, you were in my main office. You see in here, I have these pictures about the grind and execute and hustle. Signs up there. It's my thing. I'm all about, it's not even about me. It's about my clients. This is not a pair of sneakers that if it doesn't work out, they can buy a different pair or they'll, whatever. This is a house. It's a massive investment and they're putting a huge amount of trust in me. And I feel that's the same scenario with you.
It is.
And I feel super comfortable and confident when I give your number to someone that, hey, I know that they're going to get the same level of service.
And they are. And you're right. In most instances, a home purchase is the biggest investment a person makes in their entire lifetime.
Yep.
Now, will they do it more than once? Sure.
Yeah.
I mean, the average American only holds a mortgage for 7.3 years, right?
Yeah.
Before they refinance, downsize, upsize, relocate, things like that.
Yeah.
But it is. It's, I mean, especially here in Lewis, you're talking, what's the average sales price? 600, 700, 800, 900,000. It's a big number.
Yeah.
And so, if you don't have a level of confidence in your mortgage lender or your mortgage professional or even your real estate professional, then, man, it may go south, and no one wants that because it's a happy time, right?
Yeah.
I mean, I work with a lot of people and I work with a lot of first-time home buyers, and they're all stressed out. And they don't need to be.
Yeah.
It's a happy time. You're buying your first home. Enjoy it. Sit back. Relax.
Yep.
Well,
and I think that's where, the brand on your shirt is definitely part of the equation. The fact that they hold their, they service all their mortgage and everything is a key factor. But I think that the face, me representing Sotheby's, you representing them is the real driving force, because they may get another lender and I'm sure they're all great, but I know that you're always there, you're available. I'm not gonna say 24/7 because we do have to sleep sometimes. But, almost 24/7,
not much.
365. Exactly.
Not
That's
much.
optional. We don't always, try to figure out how to sleep as least amount as possible. What have you found right now? So obviously there's the topic. Rates.
Right.
Rates are the big topic.
Yeah.
In the fall, everyone was a little bit in a pause mode because as we're seeing things creep up, we're talking 8s, and after seeing that unrealistic mid-high 2s, which is something that we'll probably never see again.
Yeah.
And to make that clear, that'll probably never happen again. So we've started to see a little bit of a decrease. Like what are you seeing from your side, because you're obviously in tune with it?
Yeah. So everyone wants to know about rates, right? And so if I really knew what was exactly going to happen, I wouldn't be talking to you. I'd be in Atlantic City making some money, right?
Yeah.
So, but all indications are, that rates will continue to move down as the year progresses. I mean, the Fed is expected to drop the rate in May. So, these things are going to move in a direction that, obviously is a little bit more favorable, I think, than where we are today. But it's not a guarantee.
Sure.
And everybody always wants to talk rate. What's your rate? Well, there's obviously a lot more to a mortgage transaction than just rate,
Sure.
right?
Yeah.
And so, service, level of expertise, just availability, just everything from start to finish. There's just more to it than the rate. And I get rates important. But, as far as the rates are concerned, you have to kind of, I don't want to say look past it, but you can always find a better rate somewhere.
Sure.
I mean, there's going to be a better rate somewhere.
There's a cheaper car that
There's
you can
a cheaper
buy.
car,
Yeah.
okay. And sometimes you do get what you pay for, and sometimes you don't, right? And that's just a fact. So, as far as rates are concerned, like you do a lot of work in new construction. I do a good amount of work in new construction. I don't have anyone today participating in an extended rate lock program and paying money for the option to go down and float down and get a lower rate in 6 or 8 months, because that may very well just happen anyway.
Sure.
So why are you going to pay
a
half a point or a point, 0.5% of your loan amount, 1% of your loan amount to go and do something that is probably rather inevitable anyway, right?
Compared to like 2021, where we saw they were potentially going up, and we're like, locked now.
No, you want to protect 3%.
Yeah.
Do you really want to protect 7%? You know what I mean? So,
Exactly.
So we're hoping that, and that as time goes on over the next, 6 to 12 to 18 months, things will get a little bit better. Mm-hmm. And I think that when you get down to that 6% range, with 0 points, I think that's fair money. And a lot of people, I think, were spoiled by that anomaly for a couple of years during the pandemic, where things were in the 2s and the 3s, and it's just not. That's not where money should really be.
Yeah.
So
I agree.
Yeah, and I have this sheet, Cory. It's really funny that I've broken it out at settlements before. People are complaining about the rate. They're like, "Oh my God, this 5.5%. It's just outrageous." And I was like, "Really?" I'm like, "All right, let's play a little game." I pull out this piece of paper, and I say, give me a year from 1974 to 2022, any year, and I'm going to tell you what the average interest rate was. And if they picked anything prior to 2000, 85 to 90% of that was double digits.
Wow.
Like a lot of people don't realize in Ronald Reagan's administration, mortgage rates were 18%.
Can you imagine?
Cost of homes was less.
I was going to say,
I get it, but
it reflects,
but it's relative,
yeah.
man. It's just relative.
Yeah.
When I first got in this business almost 25 years ago, rates just got to 7% and 6.875. People, the phones wouldn't stop blowing up. They're like, I can't believe we're here. I have 10%.
Yeah.
I have 11. I have 14. Never thought I'd see this day.
Wow.
So it's all kind of relative.
Yeah.
You know what I mean? And people are making more money today. So, the cost of things is a little bit higher, but rates are, they're going to go where they're going to go.
Yeah.
And that's just kind of the way that works. But, if you're ready to buy a home, you're ready to buy a home.
Yeah. Well, I think the one thing, and to kind of speak to that point a little bit, that you have two main numbers in a real estate transaction. One is going to be, your rate, and one's your price. And that's going to make it as simple as possible, is going to determine your monthly payment, how much it's going to cost you to borrow that money. So the price, we can't adjust. You agree to a price, you borrow that money, you can't adjust at any point later on. Your rate, you can always refi. So
that's correct.
If we find that in 2, 3, 4 years, now we're down at 5.25 or something like that, refinance. But you can't change the price of your house. So what normally happens is a seesaw effect, as rates get higher, prices go down. As rates come down, prices go up. And you end up with a very similar, and again, we're being very basic here, similar monthly payment. You're just either the money's going to be on the rate side or on the price side. So in my personal opinion, I'd probably rather buy when rates are a little bit higher at a lower price, and then when they come back down, refinance. So that's kind of where I feel like we're at, but rates are starting to come down, but not enough. But prices haven't quite hit, so they're not coming up yet. So, and again, these are all like crystal ball assumptions, but
but your point is well made, because what you're really speaking to is the cost of waiting.
Sure.
Right.
Yep.
So when we look at the real estate market, and you're equally as in tune, if not more in tune than I am, to the purchase prices of homes and how that average goes and the appreciation. I mean, we've seen record appreciation in the last 36 months, right? I mean, we're talking anywhere from 12 to 19%, depending on the market. And historically, if you got 3% appreciation in a year, that's pretty normal, right, for your home.
Yeah.
So to your point, you buy a house that's 20% more expensive next year, but you've saved 1.5% on your interest rate.
Yeah, it doesn't make sense.
You're paying the same thing.
Yeah.
So why not buy now, have an increased equity position next year because the appreciation is working in your favor and come back and get a lower rate. And if it were me, I wouldn't just go back into your standard 30-year fix. When you work with a good mortgage professional, when you're talking about coming back and refinancing later, the mortgage professional should say, okay, if we take this down to a 25 or a 20, eliminate 3, 4, 5, 7 years of your mortgage payment, maybe even keep the same payment, but now we've gotten your amortization shorter, you're paying your house off quicker, and you're paying less interest over the life of the loan. That's where you look.
Well, and I think that's a great segue to kind of getting into a topic that you and I were talking about when you first got here. And this is, I think, what also lends itself to that, I don't want to say anti, 1-800 number, but probably what you don't get, less of the consulting side.
Correct.
It's more transactional, just fill in the boxes and hit enter, and that's what the number is. I brought up a scenario of a client that I'm currently working with to where they're like right on that edge of, they're trying to sell their house now, or they're going to be listing their house. There's a home that they want to buy. It's a spec home that may not be available by the time, maybe sold by the time that they. So what are ways that they can, get from point A to point B to be able to now sign the contract on that spec home while their home is being, without having to be contingent upon the house. And you brought up some really great points. So if you could, again, this is a blanketed, scenario, but options, you brought up a lot of things. I was like, wow, these are really clever things I've never heard before.
Yeah. So we were talking about that. So your client is needs to sell her home before she can qualify to buy the next home. Really wants the home that she wants to buy, right?
Yeah.
And so you were saying that the mortgage professional she was working with kind of has her right on the bubble of qualifying from a debt ratio perspective. She can't qualify with both mortgages, so she might be a little off, right?
Yeah.
So there's so many creative ways that you can look at that scenario and come up with a solution, especially if you're like just there. I mean, if you only need to make up 1 or 2% in debt ratio, there's a lot of things you can do. So we referenced conventional financing in that conversation.
Mm-hmm.
Well, you can pay down debt to qualify on conventional financing.
Okay.
You can't do that with other types of financing. So the other thing...
Now, when you say pay down debt...
like if she has a car payment.
Yeah.
If you pay that car payment down to a 10-month balance, that car payment no longer counts in your debt ratio.
Oh, okay.
So if she owes 10.
So obviously, if there's a $100,000 car, that might not. But if it's not, if there's a
but you have to look at the totality of circumstances here, where you have to look at the whole thing and say, hey, listen, where do we make up ground, right?
Yep.
So that's one thing. You can pay off these little minimum credit card payments. That, you believe it or not, that makes a little bit of a difference. The other thing you can do is, a lot of times I have people get the most minimal homeowners insurance at the cheapest premium with the highest deductible.
And then they adjust that later on.
Sure, right?
That's clever.
So that might buy you another $50 or $100 a month.
Yeah.
So that's something that works, right? And then
after closing,
you can do whatever you want.
Yeah.
But from a qualification perspective, as long as it meets the lender's criteria for 100% replacement costs, as long as it's legit, we're good. So that's something. The other things that we were talking about is if the person's over 59 and a half and they have a 401k or an IRA, sometimes lenders don't recognize that you can start your distributions from those things, and you only have to take them once. You just have to show receipt of them 1 month being deposited into your account. That counts as income. After you go to settlement, you can call up your administrator and say, I'm going to change my mind. But that's legitimate income.
So it's showing income from that source.
As long as she has 36 months of reserves of that money left over. It's called a 3-year continuance rule, right? So if she's taking $1,000 a month, that person would have to have $37,000 in that portfolio, which most people at that, if they're over 59 and a half, have more than that, right? So that's another way. And then Another possible solution would be if she has a current mortgage on her house, which she does, right? She can't qualify with both. Depending on her rate and circumstances, she could quickly go to a local bank. And I love the local banks, right? Love them. Used to work for some of them. Get a line of credit, which then takes her payment and makes it an interest-only payment. So how much money can she save just by getting that done? And you and I both know that when you go to a local bank, some right here on 2nd Street, right?
Yeah.
How much does it cost for a line of credit? 0.
Yeah.
They don't charge you anything to go get a line of credit. So the cost of your money is 0.
And then once your house sells.
And then once your house sells, it's paid off anyway.
Yeah.
So it's no different. So there's so many creative solutions that if the mortgage professional just takes a little bit of a deeper dive and kind of does some analysis and, to your point, some consulting, there's typically a solution.
So on the buying down the debt side, you stated that you can do that on the conventional, but you can't on like an FHA.
Yeah,
so does that mean that once you submit your application, you can no longer buy down? So you would have to pay that down before you submit your application? No,
you can pay it down as a consequence of settlement. You can bring the cash to settlement if you want.
I mean, with the if you went FHA.
Oh no, if you went FHA, you have to get creative. So a client would have to pay down the debt, okay, and then I would pull a new credit and start a new mortgage application because you can't. When you put something in front of an underwriter, they have a license, right?
Sure.
And so I get it, and there's rules, and we all follow the rules.
Yep.
But the rule, you can utilize the rules to your advantage in some circumstances, and you're still, not doing anything wrong for sure. So you would just have to, do some work up front.
So based upon that initial pull or that initial application that you made, you would have had to forget that we'll do another app. So you would have had to have paid it off before.
Prior to. Oh yeah, because that credit report's going to be in the file.
Yeah. So,
and
so
you
can't do it after.
You can't unsee anything.
Sure.
Right. So that's the rules.
And with conventional, you can.
Oh yeah, conventional you can do it right in the middle of the transaction.
Yeah. So they look at it and go, hey, your debt to income ratio is a little high. Pay off your XYZ.
Right. If they have the money for it, well then.
Yeah.
Because you're going to get a bigger bang. Let's say you have a car payment of $500. Right. And so that $500 really translates into roughly about $70,000 worth of buying power in the home, right?
Yeah.
So if you have to spend $10,000 to buy your car down, well, you're spending $10,000, but you're getting $50,000, $60,000, $70,000 in buying power.
Sure.
And you're eliminating that debt.
Yep.
So where is your money better well spent? Where's the bang for the buck? And that's the analysis that has to be conducted when you're looking at a mortgage application.
So long as you have that reserve, in which obviously the bank's going to require you to have some
reserves
have the anyway. Yeah.
In most cases. I mean, sometimes reserves are not a requirement. I mean, if you're a strong candidate and you have decent credit and it goes through, well, then you're good.
What are some, if you had to average out clients for the year, some average hiccups that you run into, that you see fairly frequently?
Oh man,
fairly frequently.
Yeah, you would be surprised at what we see, and I think it really depends on the market and the client. We're really diverse in the state of Delaware, and because being from Lewis and then working here and then working upstate where I live now,
sure,
two totally different markets,
completely different markets,
and then you have Kent County in the middle, which is a completely other different market.
100%.
So I think that really depends on what market you're in and kind of who you're working with. But
do you find things?
Yeah.
And I know that on the agent side, when we sign a contract, the one thing we say is don't go buy a car.
Yeah.
Don't go buy all your furniture. The second after you leave the closing table, go buy whatever you want. But yes, you have your pre-qual and yes, you're going to start down that path of solidifying all of this.
Right.
But don't go do something and buy something or deplete your I won't do it on credit. I'll do it with cash. And now you depleted that. Just don't buy anything.
Yeah.
Food and that's it.
Yeah. And I agree with you. And I offer the same advice to my clients. But oftentimes, creating and setting the right expectation in our business is probably one of the hardest parts of our job, right?
Yeah.
And so when I do work with first-time home buyers, it's not like I want them to participate in a scared straight program. What I tell them is what you're saying. Listen, here's how the process is going to unfold, okay? Here is what we're going to do in the process. We're going to run about 5 reports behind you. We're going to see if you've ever been on a title or a property. We're going to do a soft pull before we get to settlement. And we're going to see if your credit's been pulled. We're going to see all of that. And that's okay. It's just part of the process.
Sure.
Right? So don't do X, Y, and Z, because is there a solution around it or a way around it, or can we really still make settlement? Probably. Is it going to cost us a lot of time, effort, and hassle? Most definitely.
Just avoid the speed bump if possible.
Right. So if you follow the rules and you just go with the process and you don't think you're smarter than the process, then it's going to be fantastic. And that's what. And again, setting that right expectation is often difficult. I mean, I just had a client just 2 days ago. He took his earnest money deposit and took it from a cash advance on a credit card. So it's a problem.
So not.
It's a little bit of a problem
because
now.
that did debt to income.
Well, no, you can't borrow money for your earnest money deposit. You can't take money off a credit card and put it in your bank and write an earnest money deposit check. It's not allowed.
So like when you're
it would have been helpful if he communicated that to me.
I was just going to say. So what would have been good is, hey, he found the house that he wants. He's getting ready to write an offer. Hey, yes, I want to submit this.
This is what I'm thinking about
but
doing.
Let me 2 seconds. Let me call Steve up.
Yeah.
Hey, Steve, I'm going to do the,
This is what I'm thinking about doing.
Yeah.
And the realtor didn't know. She's just taking the check, right?
Sure.
I mean, she doesn't. That's not really her wheelhouse, That's one good thing about all the agents I work with. We stay in our lane, right? Like I do financing.
100%.
Realtor does the real estate. And I don't cross into real estate.
Yep.
Like, you know what? So she's not going to say, well, where did you get the money for the EMD? That might possibly be a bit insulting, right?
Sure.
So it's not her job. So she didn't know, but now she does.
It's funny you say that because that's always when I'm working with clients, my whole thing, they ask questions. And obviously I'm here to educate and help provide with as much information as possible, but I'm a big lane proponent. Like that's like how I focus. I know I'm really good at what I do,
right?
And sometimes they'll ask questions about taxes or lending or whatever it may be, and I don't want to be that person that knows enough that causes problems. So I just say, hey, look, I may know the answer, but I'd rather defer to the professional.
Sure.
That's where their license is, because my license isn't in that category. So go talk to your whatever, or like when we're in like a home inspection and they ask about our roof. I used to be a general contractor. I have a really good knowledge base on it, and I will not, because I don't know this house and it's not what I do anymore. It's not my business. So like, go to that guy. Go to that lane.
Yep.
So it's, again, and, to your scenario, that wasn't her place, so it makes sense. But instead,
but now we have a hiccup, and that's fine.
Just call your lender.
Right. And we have a hiccup, and that's okay. I mean, there's usually always a way around those things, and there's a solution.
Yeah.
But sometimes it can be a little bit more painful getting to the end than it really needs to be.
And I would probably say, and this is making a very big general statement, but calling the 800 numbers may reduce your chances of being able to get over those speed bumps, because the guy, they may have just been a waiter a couple of weeks before.
Perhaps. You never know. And that's one good thing about our company is that we have a lot of experience. Like, for example, my processor, she's amazing. She's been in the industry 25 years. And as well as I do that, internal relationships are equally as important as external relationships, right? So, we really complement one another. We work well together. And so if I see something, she may not, and vice versa, right? And so it's a team effort. It really is. And so that's what I truly enjoy about New American Funding. The talent they have here behind the scenes, processing, underwriting, closing, marketing, it's pretty insane. It's amazing, and my teammates are incredible.
For a client, are you guys utilizing an app or anything that helps them through the process, or email or text? Or
Yeah. We have both, but often, and I'm a little bit old school. I can send anything to a client if they're technology friendly and they really want to participate in the process in that way. Believe it or not, I still like to have a phone conversation because these online apps don't get down to the nitty gritty questions.
Sure. Yeah.
So that I'm going to have to come back and call the client and kind of verify this information anyway, and then I'm going to ask other questions. For example, some people, if they have an auto deduct out of their paycheck, they don't see it, so they don't really think about it.
Sure.
But that can be an additional liability that affects your qualification.
Oh, really?
Well, child support.
Okay.
If your child support's taken out of your paycheck,
Yeah.
you don't see it. You know you got to pay it.
Yeah.
But in the mortgage business, that's a liability. So that's not going to translate on the app, right?
Sure.
That's going to translate by me asking you, certain questions, opening up that dialogue,
Going through
the motions and saying, hey, listen, okay, you said you're divorced. Okay, great.
That triggers the question.
That's another question, right?
Do you have children? Do you have child support? How is that
paid? Are you
paid?
responsible for alimony or child support? Moreover, do you get alimony or child support?
True, yeah.
You don't know what the situation is because in the mortgage world, that's income.
Yeah.
And it's untaxed income. And now it can be grossed up. So now you get more credit for more income because it's untaxed.
Yeah.
So, there's a lot of stuff.
Yeah.
So to answer your question, the digital stuff is there. I can text a short code to my clients. It's NAFLoansDE to 51614, hashtag NAFLoansDE. Text that, app comes up on their phone. I have an apply now button in my email signature. Goes right to the website, preapproval. You can do all that. You can upload docs into a secure portal. All that is available. But that was going to
be my next question is, say it's, I'm out with a client all day Saturday, touring homes, and it's 5 o'clock, and they find the house that they love. They want to put an offer in because there's tons of people that were in the house also. They're not pre-approved yet or pre-qualified yet, and we need to get a pre-qual letter. How does that process work, and what's the time? Are we looking like a 2 or 3 day turnaround, or how does that work?
So not that long. So the process is pretty easy. I just did it on Friday for a local realtor here that I've been working with for years, actually for her brother. So if you're out at 5 o'clock on a Saturday and you and I work together, your client should call me at 5:05 because you're ready to make an offer, right? And so what we do is I typically have a quick 12 to 15-minute phone conversation. I get the details. If I'm comfortable with what I'm hearing, I'll do the mortgage application. I'll run what's called automated approval, automated findings through our software. And you have to come out with a specific result there to make sure that you're comfortable with that. And should all those things line up, and it's frankly really easy, then I'll issue a pre-approval. That takes about 30 minutes.
Okay.
So not long. But what I prefer to do, which really increases or improves the buyer's ability to get their offer accepted, is if I have a little bit of time, like 2 or 3 days, what I like to do is I like to get the mortgage application, get all their income and asset documents, right? And then at New American, we actually have the ability to submit all those documents to an underwriter and get the file fully approved by an underwriter and give you, the realtor, a commitment letter instead of a pre-approval. So the credit has been underwritten, the income's been underwritten, the assets have been fully underwritten, and you have a full loan approval for your buyer with your mortgage application, with your offer.
So we have a pre-qual. So they always talk about pre-qual and pre-approval. Yeah. So pre-qual is obviously the
pre-qual
least.
Is the least.
And then pre-approval, and then you have something that's going to be even above and beyond that.
Right. It's a full loan commitment, and our turn times are 1 day. So if I get all that information, I get it into underwriting. The next day, I will have a full loan approval for you.
And obviously, from the agent side, it's going to be really important to make sure that when we submit that offer, that we're also translating that. Like, hey, this isn't just a regular pre-approval. This has been underwritten already. We're ready.
Correct.
We're ready to rock and roll.
Correct. And I spoke to an agent.
Super powerful.
Yeah, I spoke to an agent last weekend at Lingo. And I called her up and I was like, hey, listen, nice to work with you again. She's like, Steve, good to hear from you. And I said, listen, there was a mortgage commitment date on the contract of 10 days prior to settlement. I said, but I provided a commitment letter already.
She's probably like, what?
No. She said, yeah, Steve, we were getting it done real quick. So the buyer agent just kind of filled that in. She goes, but I am aware that we have a commitment letter. Thank you so much for calling me. She said, by the way, she said, that was a defining moment for the seller because the house has been put back on the market. Financing fell through the first time.
Wow. Yeah, so like that sting was there and fresh.
So the fact that loan was fully approved and a commitment letter was issued helped them get the house.
So since you had the commitment letter, do you guys pull any more reports after that, or is that?
No, we don't pull another credit report. That's a great question. Our credit reports are good for 120 days.
Okay.
So once I pull a credit, if you're not in a house by 120 days, well, then on day 121, if you're still looking, we'll have to pull another one. But, 121 days. It's a while.
Yeah. I mean, if your agent's hustling, you should
if you're looking, you're looking, right?
Yeah.
I rarely.
Sometimes it takes years, but
to your point, in your area of expertise with the new construction, if it takes 8 months to build a home, then that is the conversation that we have with the client.
Sure.
Listen, this report's only good for 120 days. We're going to pull a new report 30 days prior to settlement.
Yeah.
And they have to understand that.
Yeah, it makes sense.
Yeah.
Well, I guess if you had one thing to say to someone that's getting ready, they call you up and they're, wherever they're at, this is their first home, their 10th home, whatever, of like the super most important thing that they could do prior to submitting their application or prior to going out and shopping, what would you say is the most important thing, the highest level thing that they should do?
Yeah, well, I think that answer is different based on who you're talking to,
sure.
Right? So the person who's buying their 10th home, I don't really need to say much.
Sure.
They purchased 10 homes.
They've been through it.
Right, they've been through it. That conversation with a first-time home buyer is very, very different.
Yeah.
And I think we kind of alluded to that a bit earlier, which, you provide them with a certain few instructions, suggestions.
Yeah.
This is how the process is going to go. This is your obligation. This is my obligation.
Yeah.
And, your realtor serves a purpose. And so, if we all do our job equally as well.
Sure.
Well, then it's going to
And we all have the same vision.
It's going to be great. We're all working towards the same goal, right? So that's what I would say to a buyer. Listen, you know what? You have a job, and I have a job. And the three of us, the realtor, the buyer, and the mortgage professional, we're all working as a team. And so we all have to do our part.
Yeah.
And when you do your part, you'll be amazed at how pleasant the experience is, how easy it is. And then when we get to settlement, I bring you a nice bottle of wine, some beer, and then we talk about a housewarming party, and we continue to have fun.
Yeah. And I think that's key. I think that I think the hand holding, number one, is a big deal to especially
to some,
first time home buyers.
Right. To some,
knowing that there's these people that are there to kind of have their back to help walk them through, so long as they listen.
Right.
And make sure that they're following the guidance that's being provided. But it is. I mean, we all have the same goal, and we're all working hard to it. I think that the hustle aspect, the fact that you said if my client called at 5:05.
We would have it done.
There, that's huge to me, because that's exactly the way I tell my clients I'm available 7 days a week till 11 o'clock at night. I know not everyone puts up that crazy allowance of conversations, but that's how I do things. I do things a little bit different, and to know that my clients also have a lender that's going to make themselves available to help answer questions, or more importantly, get a pre-approval. Because if we have to wait, or pre-approval or pre-qual, or even
right.
But if if you're like, I don't really work on the weekends. That we may lose out on the house. We know a lot of deals happen on the weekend.
Sure. I mean, that's when we work. And really, to your point, we're not in a 9-to-5 business, right?
That's for sure.
So on my side of the equation, you have to think about it. If I'm doing a pre-approval or I'm talking to someone about their personal information, if they're at work, they're not gonna blurt out their Social Security number or their salary, right?
Yeah.
I mean, these are all conversations that have to take place in private.
Sure.
So I do a lot of work from 6 to 8 to 9 at night and all weekend because that's when clients have the opportunity for privacy and they're available.
Yeah.
And so in my business, if you're not working on the weekends, I don't know what to say because it's a necessary part of what we do.
Yeah, and the cool thing is, like I'm getting tomorrow, not quite this time, but almost this time I'll be on an airplane to Ireland, and I have a lot of clients that are in middle stages right now. I have my phone on me, I have my laptop on me. We can write offers. I have phone numbers for all the salespeople at the communities, and I do a lot of work when I'm overseas. But some people, they check out. They're like, I'm on vacation time, and that's it, and I move on. But and then there's other ones that are maybe a little bit cuckoo like us, to where it's client first always. And
if I want to check out, I make sure I have great coverage.
Yeah,
you know what I mean?
Exactly.
That's the point. You know, you don't want to leave anyone with silence.
Sure.
So they got to have a point of contact.
It's the most uncomfortable, especially in a big thing like this.
So that's it.
Awesome, Steve. Thank you so much, man.
It's been a pleasure having me, man.
No, absolutely.
Oh my God.
And maybe
it's great. It's great to be back in 19958, man. I'll tell you, I got a lot of memories right around the corner.
It's amazing, and it really is. It's that small town. I know it's not as small as it was for you. But
it's okay.
But it's still that small town feel, and people love it here, and it's quaint.
It is.
But I'd love in 4 months or so, maybe let's get back on and kind of talk about
Oh man, sun will be shining a little bit more, be a little bit warmer. That's the time to be here.
Have some short sleeve shirts on, a little tan. So
that's it, man.
Awesome, Steve. Thanks so much, man. I appreciate it.
Thanks, man. Had a great time.
Have a good one.
Take care.
Thanks again for tuning in to this episode of Who's in the House. If you still have questions, feel free to email us at info@who'sinthehouseDE as in Delaware.com. You can also call or text any questions to 302-466-5511. And don't forget, hit that subscribe button, that notification bell. And in the meantime, keep an eye out for our next episodes. We look forward to seeing you then. Have a great day.